Hello, I'm Charlie Gibson, the head of mining research at Edison Investment Research, and you're watching Investing Channel. Now, those of you who have watched before will know that I am a bull of the gold price. There are several reasons for this. The biggest is an economic reason, and it's the background, if you like, is that we still have this position of near zero real interest rates in the US. And when I'm defining near zero real interest rates, what I mean is the Fed funds rate minus the inflation rate is coming out at about zero. And if we look at the last time that the world went through, and particularly the US went through this sort of cycle, which I reckon is the 1970s, then we didn't see the top of the gold market until real interest rates reached 4%. So if you think that inflation at the moment in the US is just a little bit below 2% at the moment, you would have to see a Fed funds rate of a little bit below 6% in order for the gold price to top out on the same basis. And I think that is extremely unlikely. Add to that we've got an election year, which you will all know, but we also have, at the same time as an election year, we have impeachment proceedings against the sitting president, who is obviously at the end of his first term and looking for a second term. The rest of the world, as you will also know, is not that settled from a geopolitical perspective. There are trade talks that are continuing to rumble on. There is the Middle East situation, which continues in its way. And on this side of the pond, we know that Brexit, well, there's probably a little bit more visibility in Brexit than we've seen in the past, but there's certainly no conclusion to that yet. It's not a resolved situation. So there are plenty of potential black swans that can come out of the woodwork to disrupt the normal economic order. So with a positive background, I think, and the potential for surprises for the year coming up, I am certainly bullish on the gold price. The price has already started to move at the beginning of this year. It's up to 15.20 as we speak. I think it could go about another $100 or so higher than that. Now, some of you are sitting out there thinking, I quite like the story regarding precious metals. I want to have some of my portfolio invested in that, be it as an insurance policy or as a non-correlated asset, as they call it. But I don't have the provisions in order to take on bullion. I want a little bit of gearing, but I'm a little bit nervous about all of the risks entailed in investing in a pure gold mining or precious metal mining stock. So what should I do? Well, I have what I regard the perfect stock for this scenario, which is Wheaton Precious Metals. Listed in Canada, used to be Silver Wheaton, and it is I would say almost unique in the fact that it's a streaming stock. So it doesn't mine its own metal. Other companies mine their metal, and it's usually a byproduct. And let's say it's silver, they have a copper mine, silver comes out as a byproduct, and they sell that to Silver Wheaton at a predetermined price. It's usually between $4 and $5 an ounce. Gold, similarly, Wheaton will buy at about somewhere between low $400 an ounce. So there's lots and lots of margin there. Now, the reason why I particularly like this streaming business plan is it gives you all the upside you want to precious metal prices. They're geared because Silver Wheaton does pay for the metal it receives. It doesn't pay the full market price. It pays substantially below, but you do get that gearing as a result of that in terms of earnings. And also because you don't, and this is very, very important, you don't get the risks of the cost overruns that mining companies have, and also capex overruns. And so for a scenario where you want exposure, you want geared exposure, but you don't want the risks attendant with typical equities, mining equities, this I think is the perfect business plan. In terms of its valuation, it's not valued. It's cheaper than all its peers. If you look at its streaming company peers, which there aren't that many, it is actually cheaper than about 50% of miners as well, or at least miners looked at on a particular valuation basis. So that is my thought for the year coming up. We hope to bring you more such opportunities very soon, and in the meantime, you have a very capital year.